Okay, good morning, everyone. Um, uh, those that are close to me know that I've been working on a strategy for a few weeks now. I initially tested it on gold with let's say limited success. It's good at some times, it's not so good at some times. But I something just said let me try it out on Deriv V75 to be precise, and I've been using it for let's say the past 1 week, both on demo and on live. And what I can say is that it's more effective on the Deriv V75 than it is on gold. And I just want to go through it with you guys. I hope the audio is okay. I notice when I record audio with my laptop, it's usually not that good unless I use TradingView. I'm not sure if this is available on TradingView. So I'll just go straight at it. Right, we're using two moving averages, just as you can see here, similar to gold, but the values are different. And we use multiple time frames just as in gold as well. Now, the time frames we'll concentrate on is 1 hour, 15 minutes, and 1 minute. Now, the moving averages we have in consideration that we use is 200 period exponential and 50 period exponential. And basically, it's similar to what how we use the moving averages on gold, but this is used a little bit differently. Now, basically, we focus on the crossovers as well. Let me zoom out and also freeze the scroll. You can see that 1 hour has been on a very steep downtrend since back in April. And what I can observe from 1 hour is whenever you see a crossover, you can actually enter the market and it will still give you a lot of pips. This is a crossover here, and you can see the market went up about 10,000 pips. You know, the way you calculate pips in Deriv is a little bit different, and the absolute high it gave you is about 1,600. You can see when it crossed negative, when it crossed down, you can see that's the current downtrend we are in. You can see another bullish cross happen here. You can see a lot of pips, although there's still a little bit of refinement. You can see there's a bearish cross here, but it wouldn't have resulted in much. See another bullish cross here, a bearish cross here, which would have made pips. So just the crossover alone on 1 hour, that alone can fetch you some good pips. But just like I do in trade, I like to filter out um, the trades based on the long-term direction. So for Deriv, 1 hour will serve as our long-term um, trend, and then 15 minutes will serve as our medium-term trend. Now you can also just look at 15 minutes here, and you just check out for any time the 15-minute crosses in line with the 1 hour. 1 hour currently is bearish, so when you get a bearish cross on 15 minutes, you can see it has continued that downward trend. You can see another 15-minute cross here, bearish cross. You can see that downward trend. You can see another 15-minute cross here, and you can see how the market crashed following that. And it's pretty much the same picture. You can see there's a crossover here. It attempted the previous high, did not make it, and then another crossover, and the market went all the way down. So it's just the same story: bearish cross, pips, bearish cross, pips. You know, it's the same thing. I can keep going back and showing you, even in when 1 hour was bullish, it's pretty much the same thing that happened in the market. Now, if you are trading 15 minutes, it's important to note that the best way I've found trading 15 minutes, although we've not had a crossover in quite a number of days, is to trail. You can enter the market, and then let's say you enter here. Yeah, you enter at this point. Let me make this line a little bit thicker so that you can see it well. Vertical line, make it a little bit thicker. Yeah, so if you enter here, you just trail the market. Anytime it comes above the 50 period and then creates a new low, you move your stop loss there. You would have been taken out by this pullback here, or at times you might wait for it to touch the 200 period moving average and then create a new low, although that is a little bit more risky. I would prefer touching the 50 period and going down, because you see most times the 50 period acts more as a resistance to the market than the 100 period does. So get a rejection from the 50 period, it makes a new low, you move your stop loss there. That's for 15 minutes. And then you come to the 1 minute and you look out for the same thing on 1 minute. Now the 1 minute, I want to spend some time here because that's actually how I've been trading it, and it has been super accurate. At least, let me say, 90 to 95% accurate, or even higher. It's not 100% accurate because no system out there is 100% accurate, but this is super accurate. Now we have 15 minutes in a downtrend. What do? Same thing on 1 minute. You just look for bearish crossovers on 1 minute, and you just target the equivalent of 100 pips. Now that would pan out to be 1000 pips calculated in Deriv money. This is the last trade I just made earlier this morning. You can see the bearish crossover here, and you can see the market moved to its lowest point so far was 1113 pips, and what we're targeting is just 100 of that. You can see another one that took place in the night. Sorry, let me remove auto scroll. I also I stayed awake waiting for this to happen, and you can see enter there, and it's just a little bit over 100 pips, sorry, 1040 pips. Take profit, go back again, look for crossovers on 1 minute. You can see crossover on 1 minute here, well over 100 pips or 1000 pips, but it continued and still went further down. Look for 1 minute crossover again, although the problem with 1 minute is that you actually need to keep an eye on the market. But one thing I've noticed is that you get at least one crossover in different parts, in different markets. Now in the morning, Asian market usually get one crossover. In London session, you get one crossover, and then towards the evening, the New York session, you get one crossover. That means you get at least 2 or 3 crossovers in a day. Now the Asian market might happen very early, like what happened today. I think the entry was around 2:30 Nigerian time. No, sorry, it was around 3 a.m. Nigerian time. So I've taken that trade for today, I've also taken the trade for London session. So right now I don't need to monitor the market until maybe it's towards New York session. You can also see this again, bearish crossover, well over the 1000 pips that you are looking for. Look at it again, bearish crossover, well over the 1000 pips. Now some people might be asking for risk to reward. The risk to reward is usually around 1 to 1 for 1 minute, from 1 minute time frame, because like I'm just targeting the 1000 pips. And usually let's use this trade as an example. You enter here, this is your entry. Where's your entry? Yeah, somewhere around here, and you're targeting 1000 pips. Yeah, somewhere around here, right? Your stop loss will be on the previous high, which is in itself is about 1161 pips, which is almost a 1 to 1. That's what I've observed. Your stop loss is usually about a 1 to 1. Here's another 1 minute entry. Sorry, look at the stop loss. Yeah, is about 1000 pips. So the risk to reward is about 1 to 1, but you can see how extremely accurate it is. This is your entry here. This is not even up to 1000 pips as your stop loss, and you can see it went down. I know some people are already seeing that, oh, some trades go beyond 1000 pips, but I just want to target peg it at that 1000 pips, take my profit, move out, and face other things. Okay, I have a call coming in, so maybe I'll just end the call there. You can see another entry here. So like I said, you get an average of maybe like 2-3 good trades in a day, right? If you place a trade with $1, you get your $1 return. If you place your trade with $10, you get your $10 return per trade. If you place a trade with maybe $20, $50, you get your $50 back per trade. Like today I've already placed, because I was trying to be more conservative, the first trade I placed was with $10 today. This next trade I placed, this first trade was $10. Let me remove auto scroll. The first trade I placed was $10. The next trade I placed was with $20. So today I've already made $30 just and this is still around 10:30 in the morning, so I'm still looking out for the next trade will also be $20. I'm still looking out for another $20 today that will round up my trades for today to be total of $50. And then by tomorrow, depending on how bold I am, maybe I'm going to now start maybe committing maybe $50 per trade. So that's a potential of maybe $100 to $150 tomorrow. So let's see how it goes, right? I just wanted to share this knowledge with you. They say the best things in life are free. I know a lot of us have tried Deriv in the past without much success, but so this is an opportunity for us to take another stab at it.